live from Lagos, the home of Nigeria's financial markets. Welcome everyone to Wednesday, the 10th of May. I am Bosin Amofaye, and we're reaching you from Channel's global headquarters here. We welcome our viewers here in Nigeria and around the world. Let's get started. The head of Africa at the International Monetary Fund, Mr. Abebe Selassie, is calling for policy consistency and strong macroeconomic policies to improve the economy of the continent. Selassie, who was speaking at the launch of the Sub-Saharan Economic Outlook in Abuja on Tuesday, says the region experienced slow growth, about 1.4% last year. He, however, says a growth of 2.6% is expected in 2017, which will be majorly driven by recoveries in oil production, especially in countries such as Nigeria and Angola.
Officials from the International Monetary Fund, Nigerian officials and other economic experts at the presentation of the Economic Outlook for Sub-Saharan Africa. The economic outlook for the Sub-Saharan region, according to the head of African Department of the International Monetary Fund, witnessed a downward trend in commodity prices. It also shows that inflation was high, while high cost of food prices and fiscal deficits were witnessed in the region. IMF says the outlook is as a result of delayed policy adjustments, increase in public debt and declining reserves.
We've seen, particularly in the case of oil exporters, reserves trending down. The red bar here, the red line, shows basically the trend for reserves for oil exporters. In most of the other countries in the region, reserves have, they've been declining also, but have held up fairly significantly.
Government officials at the event admitted that 2016 indeed was a difficult year, which was characterized by low price of crude oil at the international market and youth's restiveness in southern Nigeria, leading to low crude oil sale.
Framework of risk-based
They are assured that the recently launched economic recovery plan will offer a solution to the challenges experienced.
The business model of extracting and exporting raw commodities with little or no value added cannot continue. This old approach must give way to a broad-based growth model driven by import substitution strategies that will localize production, help create jobs and achieve sustainable growth.
The recent introduction of the investor-exporter forex window has boosted liquidity in the foreign exchange market and has instilled or re-established the needed confidence by external investors in the economy.
The IMF gave advice on what Nigeria and other sub-Saharan countries could do to change the negative story.
This finding reinforce the call that we made earlier in the previous presentation for a strong domestic policy response to revive growth where it has faltered, but also to sustain it where it remains relatively strong.
The presentation of the economic outlook for the sub-Saharan region serves as a wake-up call for leaders in the region to join forces to improve their economies. Their actions in the long run is expected to improve the well-being of the people in the region.
Nigeria's GDP for 2018 has been revised upwards to 1.9% by the IMF. We have a lot more on that in the days ahead and for the rest of the week. Look at the markets now. The stocks on steroids after 2 solid weeks. We're now in the 3rd week of a strong rally on the markets. Yesterday, investors bought nearly $6 million worth of shares of Nigerian banks on the day that we saw a very decent trading day. The market all share index, what you call the composite index, was 1.28% to the north. So we're now solidly in 26,000 level and heading towards 27,000, 26,756. The market cap heading to 9.24 trillion naira. In the last couple of days, we've added about 350 billion naira in total value to the market capitalization of the Nigerian stock market on the equity side. Yesterday was also decent in terms of total transactions, 4,519. For a net naira value close to 3 billion naira. And of course, the total transactions just a shade of 550 million shares. However, it was all quiet a little bit around the unlisted securities market. Look at the NESD OTC summary for the second trading day of the week. The unlisted securities index was unchanged at about 593.32 reading. That keeps the market cap now slightly shaving off to 401.59 billion naira. In volume, yesterday, very small, 92,558. Total value, just about 1.1 million in 24 transactions. At the secondary market for trading bonds and treasury bills via the FMDQ OTC Securities Exchange, it was also a very active Tuesday trading, despite the auctions that we saw from the financial regulator, the central bank, last week. The market liquidity still in helping out in terms of what the secondary transactions look like. So look at a bit of a summary. The main deals for the FMDQ OTC FGN bond paper yesterday, 2.2 billion was the most active. In terms of naira value for the papers maturing 18th March 2036, one of the long-dated benchmark bonds on our market in 19 deals. And you go down there, you find bills maturing 2034, 2037, and 2027. And of course, 5.70 billion. But there's a lot more active when you flip that and you look at the treasury bills market. Total transactions was look at 45.25 billion naira transactions in treasury bills maturing 15th of June. That's about 30 days from now. That's quite aggressive. And you look at the 8th of June, 27.25. If you add that together, you're looking at almost 70 billion or more for two of the treasury bills maturing next month. So quite a lot of investors keeping an eye on that. And you can see the discount highs there. Look at the net value for the day, 115.67 billion naira. Currencies is also part of the conversations. Of course, the Nigerian local currency is still making a bit of a rally, despite the fact that hedge funds managers are pricing the naira local unit a little bit lower at the investors and exporters window, opened just about 2 weeks ago by the Central Bank of Nigeria. Look at the market at the interbank, the parallel, and the I&E window. This is where we finished off yesterday. Naira dollar 305.65, naira pound 410.11, naira euro 342.92 at the interbank spot market. On the street, you find the naira around 390, on the greenback, on the pound 492, and neutral or at 425 against the